I'm Zachary Bauk, Chief Investment Officer of Denver Wealth Management. The stock market's making headline news today because the market opened down 7%, which caused the stock market to cease trading. Basically, if the market drops fast and suddenly, they take a little break to let everybody try and stop the panic selling. If people have orders that are automatically triggered to sell, give them a chance to take those orders off. The market's been down almost 20% in the last couple of weeks. It's been a rough time for investors. I'm here to remind you that if you're a long-term investor, the cost of getting the good returns of the stock market over the long term are living through the bad times like this. If there was no down months that were down 20%, we wouldn't be able to get those good long-term compounding averages. So this volatility in the stock market, whatever the cause is today, which we can talk about in a second, whatever the cause is part of the reason why you make so much money in equity markets over the long term. Now, this particular flavor of stock market drop is due to the coronavirus. There's been, for the last 2 weeks or so, the coronavirus has been very slowly causing more and more people to freak out. And the reason people are freaking out is because it's going so slow. If everybody in the world got coronavirus tomorrow, it actually wouldn't be that bad for the economy. But the problem is that it's in China for 2 months, and then one person goes to Italy, and now it's in Italy for 2 months, where it's very slowly slowing down all the economies. Well, this is causing investors to worry. Our opinion, though, is that the short-term price in the stock market, all that reflects is what the cost is or the price is if you buy or sell your stocks today. If you're not going to buy or sell stocks today, it actually doesn't matter too much what the price is in the stock market. So if you're not going to sell your stocks for 10 years, there's no reason to worry about selling them today just because the stock market is down. One of the things we like to talk about when we talk about being diversified is the lost decade in the stock market. From 2001 to 2011, the stock market made S&P 500, if we're using that definition of the stock market, made a 0% return. That's only true if you bought on a certain day in 2001 and sold on a certain day in 2011. If you were buying every month from 2001 to 2011, you actually made a 7.5% annualized return. Well, why is that? Well, because as the stock market goes up and down, some months you're buying on the up months and some months you're buying on the down months. If you don't buy during the down months, you're giving up a lot of that long-term return. So if you are a long-term investor, you have to see these big, scary red days as opportunities. And that's one of the reasons at Denver Wealth Management we're here to help you, is because when we see the market down 5%, or right now it's down 20% from the top, we see that as an opportunity to buy good companies. If you're a long-term investor, a growth-oriented investor, this is an opportunity. It's no reason to sell, and thank you for hiring us because we know what to do in these situations.